Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 16th of December, 2023. And it's the weekly technical analysis for spot gold and dollar yen for the third week of December. And for both of these inversely correlated pairs, the major bounce from support was on Wednesday with the announcement from the Federal Reserve that had a dovish outlook and perhaps adding another rate cut in 2024 to perhaps 3. And the market took advantage of that and weakened the US dollar, and this took a big bounce. Whereas the US dollar against Japanese yen, as you would expect, fell through daily 200 EMA again, and then followed through to spike below the previous week's swing low before consolidating on the Friday. So all mainly due to the US CPI data and PPI as well, and but the key one from the Federal Reserve on Wednesday did the damage for the US dollar. So let's take a look at the key drivers for last week, and then look ahead for this coming week, this final week for the year, with holiday weekends coming up and a couple more weeks to the new year. And last week was a lot of data and news, as we highlighted, and beginning with CPI figure, which met expectations, and but not higher than expected. So market was still hopeful, especially with the wholesale inflation, the PPI, also not increase higher than expected. So staying flat, and hope that there'll be further easing in the pipeline. So then the surprise from the FOMC, where they, yes, they did not change rates, but they were more dovish with possible additional rate cut for 2024 in their projections. So that fueled the majors against the US dollar and drove the US dollar further weaker. And then followed by the next day with Bank of England and ECB, where they also did not change any rates, but they were more cautious and did not project any future rate cuts yet, and they're still data driven and more cautious in their outlook, and in the hope that inflation may have peaked, but they're still going to take a look at data every meeting. And on Friday, as well as the comment from one of the FOMC members, where trying to cool off the market, and where the market was trying to project earlier rate cuts, and highlighting that no, the committee is still looking at data and still data dependent. And on Friday, the services sector did pick up for the UK and the US against the Eurozone, which suffered with both sectors moving down lower than expected. So this helped to stall the US dollar weakness for a bit. So looking ahead for this week, there's a couple more UK news, and the key one for the US with the core PC price index, on Friday. But starting off with the RBA with their release of their minutes of their policy meeting, and also on Tuesday, the Bank of Japan's last meeting to try to hold up the Japanese yen, where it has been suffering of late as the US dollar weakens. So critical one for the Bank of Japan, but nothing is expected, no change is expected unless they make some surprise policy changes. UK CPI is expected to slow down, so we'll see whether that's could cause further retracement in the cable and the sterling pairs. As minor news with the final GDP, and also Wednesday there's also US consumer confidence, and it's no change expected for the quarter. And finally, on the Friday, there's UK retail sales. We'll see whether the economy is stalling or picking up on the retail side. But the key one will be the core PCE price index, where they're not expecting any drastic change, and market expecting just a neutral slight move up, but we'll see whether it's going to create any trigger any price action in the last day before the holiday weekend. Okay, so that was a very drastic news week last week, and just before the end of the year. Let's move back to the analysis. So let's begin with spot gold, where it did find support at the daily 55 EMA at this 1975, and it did dip down to hit the support, and then had a big bounce on the Wednesday with the Federal Reserve's dovish statement and press conference. But it did not continue further, just fell shy of 2050 again. And we did highlight last week that this is going to be a potential significant resistance, as it's starting to perhaps form an unusual head and shoulders pattern here with a long upper spike. So in the short term, there could be further retracement lower. We'll see this coming week how the US dollar reacts. And 2000 is going to be key. So, but there is a range here, a very wide range in the 1975 and the 2050. So that's already $75 or 750 pip range to contend with, and which is fine even if it's consolidating. Just need to pick your times and the setups. And no major news, some minor news before the key one on Friday, with the core PCE price index, another inflation figure. but the market expecting no major changes from the previous month, so hoping that there'll be further weakness in the US dollar as potentially rates could have plateaued. All right, let's compare this with the, well, before we move on to, let's also check the weekly time frame. See, yes, it's a spinning top close, so not a very bullish close, and likelihood of consolidations there between this upper and lower wicks. So it could be just consolidation, could be above the 2000, sitting around the 62 fib. So let's see how the US dollar price action is as well. And in comparison with spot gold, we should see further weakness in the US dollar. So let's switch over to the DXY. And here's the US dollar index, where you'll see where the major move was on the Wednesday with the Federal Reserve's announcement. And follow through the next day, there was a gap down on the Thursday for a breakdown of this recent swing low. And all finding resistance at the daily 200 EMA. And just below the 62 fib retracement. So it has now broken down below the recent swing low, but managed to bounce back up on the Friday, back above the swing low. And it could just be attempting to recover back to close this gap. So we'll see how far it's able to retrace or pull back. And this is a key one with the Harami. So it needs to break above the previous candle high, and let's see how far it's able to pull back higher, or if it's just going to consolidate and then resume its weakness. Let's take a look on the weekly time frame. And it is bearish, not able to break above the 104. So, but with this low wick, we'll see how far it's going to pull back up. Perhaps to where it broke down. And then it could be just consolidation. If it does break below that last week's swing low, then it's likely going to tap on 101. And in the hopes of finding support. All right, let's move back to the daily and take a look at the past here, and that's where the swing lows were. That's where it hit or tested, and if it does break down, it's attempting to get into this breakout area of the US dollar index. Okay, let's mark that swing low area here. So that did hit exactly. Let's mark that as a key support now. Critical significant support with intermediate support at the 102, where it just crossed back up from the recent swing low. And intermediate resistance at the 103. And the 786 pip retracement here. Major resistance now is going to be at the looks like there's some room between the daily 200 and the 55 EMA, just below the 62 pip retracement. All right, so let's see how the US dollar price action is for next week, this coming week, with some minor news and the main one at the end of the week, but there will be some pullback consolidation and some potential moves. We could also add another area of resistance here, this gap area. It's a potential resistance as well. All right, let's move back to the other pairs. Moving on to dollar against Japanese yen. And along with the DXY, this has tumbled lower. This was Wednesday's FOMC statement. And then a follow through on Thursday, just to spike below the previous week's low. And then consolidate on Friday with a small spinning top. But early in the week, this coming week, there's Bank of Japan's monetary policy decisions where they're not expected to make any changes, but they could also surprise. So especially with all the weakness in the Japanese yen, I mean, strengthening in the Japanese yen as the US dollar weakened. And this has already tumbled from the double top here, just below 152 and all the way down to just below 142. So that's already $10 there. So that's already or 100. That's already 1,000 pips fall from this high. So that's a major move here, which took some time to build up over months and years. And it has tumbled in just a month and a half. Let's take a look on the weekly time frame as well, and it's sitting right on the weekly 55 EMA. It is quite a bearish close, so we'll see how much pullback there is before it could attempt to break down lower and target this key round figure at 140. We'll see if it's able to break the last week's low or the 138 fib extension. Move back to the daily and take a look on okay. So yeah, it needs to break below last week's low, because this is already a swing low area with the 142. So it needs to stay above 142. So we'll see if there's anything surprising coming out from the Bank of England's meeting on Tuesday. And then by Friday, there's the US core PCE price index to continue to trigger any US dollar price action before the technically, well, not technically, but before the major close for the year with Christmas coming up and another week before the New Year. So for now, let's move this lower to an interim level with the 142 and move this significant support to the 140 and interim resistance at 144 along with the daily 200 EMA. Major resistance up at 146. Okay. So let's see what all the major pairs and including dollar yen is going to start to move to attempt to close for the year and for the month and for the next couple of weeks. And there won't be any review for next weekend since the Christmas weekend is coming up, and analysis will resume the following week with the start of the new year. So do enjoy your holiday break and wishing everyone a Merry Christmas and season's greetings for the year. Have a safe and a good trading week and stay safe for the holidays. and cheers for now.